oxide company J.G.Chemicals is in focus. They've just come out with results, and in fact a recent IPO. We have Anirudh Jhunjhunwala, MD and CEO, and Anuj Jhunjhunwala, Director and CFO of the company, to join us. Anirudh, let's start with you. The quarter looks good. What is the bigger picture looking like? You are from a chemical space. There is a view that things are turning on ground and next 2-3 years look very promising after 4-5 bad years. Are you getting that sense at your business as well? Anirudh, you are on mute. We can't hear you.
So thanks, Ajay. Sorry about that. Thanks,
Sure.
Ajay, for inviting us to this chat. As you rightly said that, yes, the sector seems to be having some tailwinds. But having said that, you would see that in spite of the sector not doing well in the last 2-3 years, our numbers have been very good and we've maintained a healthy growth rate, barring last year, where H1 numbers were not very good. But if you see the H2 numbers, they've been pretty much in line with what our historical growth rates have been. So yes, overall, we are very confident and very buoyant with the next 2 or 3 years projections. And we feel that the sector should do well, and in turn, our company should also do well.
Right. Anuj, since you are the CFO and you look at numbers much more closely, talk to us about what kind of improvement are we talking about here in your profits and also margins going forward?
Sure. So you see, our business more or less in the first half, we had an effect of a fall in commodity prices because we carry a certain amount of inventory. That was the reason why EBITDA margins fell down. And in H2, we saw that the zinc prices had stabilized and we had a normalized EBITDA margin. Going forward, our EBITDA margin should expand because of a few reasons. Number one, the growth of the specialty and the pharmaceutical grade zinc oxide that we produce. We also have the GMP license to make those grades. Secondly, zinc sulfate, which we started about a year and a half back, that business is ramping up fairly significantly this year. The EBITDA margins in that business is higher than the existing plain vanilla zinc oxide business. And along with that, we are also looking at certain other zinc-based chemicals, which have a higher EBITDA margin. So overall, we expect that the EBITDA margins will be slightly higher than what we are achieving currently. And of course, with economies of scale, there would be operating leverage as well, which will help kick up the margins slightly.
Okay, great. Can you now talk about forward-looking things as well? At that time when you were there on the channel before the time of IPO, you were kind of governed with forward-looking issues. But now, Anirudh, leave us with what internal targets have you set for yourself on the top line and profit front, say 12 to 24 months far out?
So, Ajay, just to put the context in the right place, we are not in a position to give forward numbers right now because we don't believe we are in the business of predicting the future. But having said that, historically also we've had good double-digit growths in our revenues and also profitabilities. And as Anuj just mentioned, that it's because of the reasons that the projects that we are undertaking in the next few months and also in the next couple of years, we feel that we should be able to maintain a high double-digit revenue as well as profitability growths. Also, you must appreciate that for us, what matters more is the tonnage growth rather than the revenue growth, because sometimes the prices of zinc, etc., have a change. They may go up, like we are seeing in the last 3 weeks, the zinc prices have gone up quite a bit. So these impact the revenues on a positive matter. And if it goes down, the revenues might come down. But what is more important is the tonnage growth. And we've achieved very healthy tonnage growth over the last few years, barring last year, which was obviously not so good year. So we expect to maintain those levels going forward also.
Fair point. Volume growth and the tonnage growth is something to watch out for, not the revenues. Important point. Thank you very much, Anirudh and Anuj, for joining us on the show.
If you like this video, then like, share and subscribe to ET Now.